In the freight and logistics industry, competition is relentless. Freight brokers are constantly looking for ways to differentiate themselves in a crowded marketplace where rates, service quality, and network size often feel like the only levers they can pull. But there's another tool, often overlooked yet incredibly powerful, that can set a broker apart and open doors to larger, more lucrative shipper accounts: their credit profile. Most brokers think of credit only in terms of risk management. They worry what their score says, how quickly they pay carriers, and whether factoring companies will approve their invoices. While all of these are important, savvy brokers recognize that their credit profile can also function as a sales weapon, a trust signal that reassures shippers and demonstrates long-term stability. In an industry where trust is as valuable as capacity, leveraging credit data for growth is a strategy that can pay dividends. In this video, we explore why credit matters to shippers, how to turn credit data into a sales advantage, and how to build a credit profile that wins business and becomes part of your brand. We'll first dive into why credit matters to shippers. Shippers have more choices today than ever before when selecting brokers. From established 3PLs to fast-growing digital freight platforms, competition for freight has intensified. So, how do shippers decide which broker to trust? Beyond price and service promises, shippers want financial stability. A strong credit profile tells shippers, first, that you pay carriers on time. This signals that their freight won't get stuck because of non-payment disputes. Second, that you manage your cash flow effectively and demonstrates the ability to handle larger loads without risking operational disruptions. Third, that you're a lower risk partner. Large shippers, especially those with complex supply chains, need reliable brokers who won't disappear overnight due to financial strain. In short, your credit isn't just a measure of your reliability to carriers, it's also a key credential when competing for bigger shipper accounts. Next, we'll explain how to turn credit data into a sales advantage. Instead of hiding your credit report in the background, proactive brokers use it as a marketing and sales tool. Here's how. 1. Make your credit part of your pitch. When presenting to a prospective shipper, don't just highlight your lanes, capacity, or technology. Share your strong days to pay or DTP trend, explain your Transcredit score, and demonstrate your track record of timely payments. A simple line like "our average DTP is 27 days, well below the industry standard, which ensures our carriers are consistently satisfied," can reassure a shipper that your business is stable and well managed. 2. Use credit to differentiate. Many brokers present nearly identical proposals. Rates, service areas, and claims about great customer service often blur together. Including your credit rating in your sales material differentiates you by showing something that's harder to fake: financial trustworthiness. 3. Anticipate shipper concerns. Some shippers have been burned by brokers who fail to pay carriers, leading to liens, lawsuits, or freight held hostage. By addressing your financial reputation up front, you put those fears to rest. For example, highlighting your clean record of dispute resolutions can be as reassuring as a high credit score itself. Now, let's look at some real-world applications and how brokers of different sizes can leverage credit in their sales strategies. For a small or new broker, a startup brokerage competing against larger firms can use their solid credit profile to reassure shippers that while their team may be smaller, their financial practices are sound and their carriers are paid quickly. This builds trust that size alone just can't. For a mid-size broker, when trying to move upmarket and win national shipper accounts, mid-size brokers can use strong credit as evidence they're ready to scale. Large shippers want partners who can handle volume without cash flow issues. A positive credit report provides that confidence. For a large broker or 3PL, even established players benefit from showcasing their credit. For big accounts that require extended payment terms, being able to prove stability through credit ratings can be the deciding factor between two equally capable competitors. Now, we'll look at some action steps for building a credit profile that wins business. If credit is going to be part of your sales playbook, it must be strong and credible. Here's how to build a profile that not only protects your business, but actively attracts new customers. 1. Pay carriers promptly. Your days to pay metric is one of the most scrutinized elements of a broker's credit report. Consistently paying carriers within 30 days or sooner is one of the fastest ways to boost your score and reputation. 2. Monitor your report regularly. Just like consumers checking their personal credit, freight brokers should monitor their business credit profile continuously. Tools like Transcredit's monitoring service provides alerts when scores shift or when new references are added. Staying on top of changes allows you to address issues before they cost you a contract. 3. Resolve disputes quickly. Disputes happen in freight, but how you handle them matters. A broker who responds quickly and works to resolve claims demonstrates responsibility. Leaving disputes unresolved can drag down your score and give shippers pause. 4. Submit carrier and trade references. The more positive data in your report, the stronger your profile. By regularly submitting references, you help ensure your report reflects the full scope of your reliability, not just isolated cases. 5. Align credit with growth strategy. If your goal is to win larger shipper accounts, treat credit as a core part of your growth plan. Just as you'd invest in sales reps or technology, invest in maintaining and improving your credit profile. Next, we'll discuss how to position credit as part of your brand. Smart brokers go beyond using credit data reactively, they weave it into their brand identity. Consider website and marketing materials. Feature your credit rating and average DTP as a badge of reliability. Carrier recruitment. Promote your strong payment history to attract quality carriers who want to work with financially sound brokers. Shipper presentations. Include credit metrics in your RFP responses and sales decks. By turning credit data into a core part of your narrative, you make it clear to both shippers and carriers that financial stability is not just an internal metric, it's a pillar of your business. We'll now look at the competitive edge in 2025 and beyond. The freight industry in 2025 faces no shortage of challenges: fluctuating interest rates, tariff pressures, rising insurance costs, and soft demand in certain sectors. In this volatile environment, shippers are more cautious than ever when selecting partners. They want brokers who can provide not only service and competitive pricing, but also financial resilience. This is where leveraging your credit profile gives you a competitive edge. It's proof you're not just another broker hustling for freight, you're a reliable, financially stable partner ready to support long-term growth. Some final thoughts. For freight brokers, credit is often viewed only as a defensive measure, a way to avoid being denied by carriers or factoring companies. But when reframed as a proactive tool, credit data becomes a sales advantage that can help win bigger, more profitable shipper accounts. Shippers trust brokers who are transparent, stable, and financially sound. By showcasing your strong credit profile, you turn that trust into contracts, long-term partnerships, and growth opportunities. In a world where trust and reliability drive freight relationships, your credit score isn't just a number, it's one of the most powerful sales tools you already have. As always, we appreciate you for watching. Hopefully you found some useful ways that you can leverage your credit data for growth. Remember, this information and more is available on our website at www.transcredit.com. Don't forget to like, comment, and subscribe to our YouTube channel at Transcredit, and we'll see you next time.